traders, good morning everyone. Welcome to our new video updates for the intraday chart. As you know, coronavirus is spreading in the US, but stocks are still moving to the upside, and probably because everything has been already calculated in. Investors were realizing actually that sooner or later this will also spread in the US. So this was already the case 2 weeks, 3 weeks back, and that's why you have seen an extreme sell-off on stocks back then. But now it's market is reversing, maybe already on speculations that sooner or later even coronavirus in the US will stop, similar like we are seeing in China now on April 8th. Everything is planned to go back to normal. So if that's the case, then obviously optimism will be seen in the markets, and that's maybe why we are seeing here the US stocks pushing higher. And at the same time, obviously because of correlations, we can see the dollar is coming to the downside. So if we look firstly at the euro dollar, there's still no man's land, I would say. Either that's a free wave rally but only if you see a 5-wave drop, which means a strong drop and a daily close below this 108.90, then I would assume that more weakness will be coming after a pullback. If you see only a 3-wave drop or a slow and choppy price action here, and maybe you still get a retest of the zone down there, but the key is how this pullback will unfold. If it will be slow, choppy, overlapping, then you will know it's a corrective, and in such case you could expect more upside. So again, still game of the patience. I mean, nothing really clear here, if you ask me. Now if we look on cable, now cable on a 4-hour chart is still, it's in a very important zone. Watch this trend line of the base channel as well. It's a parallel trend line. Okay, so it's an important potential resistance area, but again, you need an impulsive decline. So far that's not the case. Maybe this could be a result of a leading diagonal for a first wave and then more weakness, but again, the most important would be this overlap. Okay, because if you count this as a wave 1, you have a wave 2, wave 3, and you're now maybe now in a wave 4. Well, in such case you must not get this overlap. If this happens, then you know that bears are still alive. Now looking at Aussie dollar, it's trading at a very interesting resistance here on the daily chart. Looking at the 1-hour chart, you have here this potential ending diagonal for a wave C. Now I really like the approach then when you have an uptrend, okay, that not only the first support, you want to see the second support also to be broken, which means double supports must be taken out before market can be identified as a reversal point. Why I'm looking for 2 swings to be broken? Well, it's because this first swing can usually represents the 4th wave support in the Elliott wave cycle, and normally this is where the again higher degree trend will resume. So if you see a first slip for the first swing support and then also the second one, well, then all odds are probably increasing in favor of our market reversals. So in that case, under that approach, the second support that we have to watch is down here at 060.20. Okay, that's the level where I would like to see a maybe fall below, then a retracement, and then more weakness. So that would be the first confirmation that actually market is changing its direction. But overall speaking, I mean, the whole characteristics of this recovery really looks correct if you have plenty of overlaps. You can either count this as an ABC, like I have a primary leveling, or maybe even as a WXY in 7 swings correction. Still you would expect a weakness. Maybe some would say that this is a leading diagonal, the whole, like a wave 1, 2, maybe wave, I don't know, wave 3, 4, 5, I don't know. So if in such case you would expect more upside after a pullback, but still you have to see this pullback, right? So in my opinion, there's still a chance on different scenarios that actually Aussie dollar will see some weakness here. Also the dollar against Chinese yuan, still, I mean, it's looking very corrective here. Okay, it looks like a very nice triangle, so watch out for more upside here, and obviously this means that Aussie dollar could come down as well. Now let's take a look on dollar cat. Now dollar cat is having some very nice reversals from the supports that we have been identifying. So here is so here is the 4-hour chart. First you have the 50% and the previous starting point of a wave 4 retest, and now you are reversing higher. Also notice that bounce comes from the lower side of this corrective channel. Usually that's indication that really this was a corrective movement. Also you are seeing a rise above the middle line of this channel, so the first indication is here that we are going higher, and in fact in the 1-hour chart you have here already some evidences that we are turning to the upside impulsively. So I will watch out this ABC setback very closely. I know that the ranges are still huge. I mean, if you go long here, you will have 300 pips stop loss or so. So if you consider risk reward trade, I mean, you will, in such case, if you have 300 pips stop loss, you will be targeting what, 900 pips? That's definitely not easy. So I prefer to wait on a better risk reward setups, and maybe watch out what happens once we see a pullback. If you see an ABC formation and then wave C maybe starting to reversing from those wave 2 supports, then I think that this could be very attractive for longs. At the same time, obviously you will be watching the crude oil prices, and I mean crude oil, it can be in a barrier triangle here. You have wave A and then you have this A, B, C, D, E pattern, so in a wave 4. So in my opinion, I mean, still room for more weakness. Even looking at a heating oil here, I think it has a very nice and same pattern. Also those lows haven't been triggered yet. Same thing here on a Brent. So I'm expecting that energy market will stay under pressure, and maybe this will send cat to the dollar cat to the upside. At the same time, what could happen on the S&P 500 is maybe that S&P 500 will find the resistance for wave A, maybe here around 2700. Okay. In fact, looking at the 1-hour chart here, maybe that latest price action was a triangle here, and you are now going into the 5th wave. You have a room for another 70 points or maybe even 100 points to the upside to make this 5th wave, but you really should be aware of a corrective setback. Once this happens, this corrective setback, well, that's the timing when maybe crude oil will really start moving to the downside. Now there are a lot of analysts, traders, even skeptical investors who think that this is only bear market rally and that you will see a drop. Okay, that's perfectly fine, but you still need a free wave movement within this corrective recovery. Okay, so I'm sure that when this wave B kicks in, if we will experience the first very strong decline here within wave B, representing like a wave A, then you can imagine how everyone, even media, would probably become again aggressively bearish, calling for 2000, probably for a new low, that we are still not done with this bearish cycle, which is totally fine. But based on the Elliott wave substructures and characteristics, rules, guidelines, I really think that even if we see a drop here, when everyone will start rushing maybe into some shorts, maybe into some hedge, I would not be surprised actually that you will see another kick in price for a wave C to the upside, maybe even wave 3, who knows. Okay, so you really should be prepared maybe that this ABC setback, once it will unfold, could be actually a very nice potential structure that will send us even higher, and at the same time, you know that what may follow on the other markets as well, obviously, because the markets are correlated. So long story short, I mean, we are in a 5th wave. We could face temporary resistance, we could sell off here. At the same time, when this wave B kicks in, crude oil can hit a new high. At the same time, dollar cat can see more upside, and dollar in general. Now also looking at the DAX, Here we have also very similar price action. I mean, wave 1, irregular wave 2, you have a wave 3, wave 4, you are now in a fifth wave rise here. So again, same story. You have 5 waves up, market comes down. Other non-Elliott wave traders will see this as a start or a resumption of a higher degree downtrend. They will be looking for a drop below March levels, but you will get only an ABC pullback, and this could actually then cause a new bounce on the DAX and stocks in general, and a lot of traders, even investors, will find themselves on the wrong track. Okay, let's take a look what I have left. Euro pound. Now euro pound is still testing potential supports. We have been highlighting this as 0.9071 as the first very important level for a reversal, for a confirmation that wave 4 has bottomed. So far this did not happen, so you must always be prepared on even new lows. You just patiently should wait on an impulse to rally if will occur, and then maybe be looking for potential longs if you see this bounce. Until then, I really think that you should be careful. Now what I have left, dollar against Swiss franc. Now this one also could be interesting. Looking at the 4-hour first, maybe you will get a deeper pullback here for WXY. I'm looking this swing support when this very strong move to the upside started. So actually the whole this zone here around 78.6% is very interesting. Even 61.8% still hasn't been retested. So maybe there's still a chance for a new drop, but if we see an impulse above 97.13, then watch out for more gains. Okay, that's the 97.15 around there. That's also the level of this wave A. Okay, so also at the same time you have this falling trend line. So if these both trend lines would be taken out and you will get an impulse rise at the same time, then obviously I will immediately call for more upside. Now what I have left, I covered. I have dollar Mexican peso. Okay, so dollar Mexican peso, I have been posting this one yesterday. I also made a very detailed outlook on this one as well. I think that dollar Mexican peso is still poised for to see more weakness. Maybe we'll be chopping around here a little bit. It really depends how high we get this fifth wave on the S&P 500, but Mexican peso can be very volatile, and you may see just a very limited upside move from Mexican peso, but you can, on stocks, but you can immediately see a very strong drop here on this currency pair. However, at the same time, watch out the crude oil. The best setup, as I said, on dollar Mexican peso for shorts would be after you see a new low on crude oil, but unfortunately this didn't happen. So it's a little bit tricky, but still, if you are in the trade, if you want to trade, just be aware of a risk, maybe because of all correlations, all parts of the puzzle for potential trading plan are not here, in my opinion. That's why you have to be a little bit more careful. So consider your risk size. But just from a clear, poor perspective, I mean, you have a broken trend line reacted as a resistance, you have a 5 waves down, you have seen a 61.8% retracement. So maybe you still get a weakness here, okay? Or it will just stay sideways for a longer period here for a few more days, and then you see a drop, okay? Traders, thank you for your attention. I hope that you enjoyed this video. I will catch you with more updates later. Bye.